Hi, welcome. It's Mary Ellen McGonagle here with your weekly Edge show for Friday, March 31st. Today, as usual, we're going to take a look at the broader markets. We had a pretty eventful week, and I'll share with you where we are relative to support, resistance, and the new uptrend that's now in place for the S&P 500. Also, some of those headline news that drove price action last week. You want to be aware of what is moving these markets. And then also, I'll share with you key data that is due out next week as well. Last up, viewer question of the week, and that is taking advantage of the downtrend reversal that's shaping up in some of the industrial and material areas. That'll all make sense as we go through, take a look at the sectors and then some underlying groups to really uncover where the strength is in the markets right now so you can take advantage of that. So let's go ahead and get started. Last week, we did see the S&P 500 post what is called a follow-through day, and that is characteristics that mark a market bottom. So very exciting there. I'll share that. Also, the NASDAQ has entered a new bull phase because it is up more than 20% from its recent lows. We'll talk about that further as well. Last week, pending home sales rose for the third month in a row, and that's really helping keep those housing and construction stocks in an uptrend. The fourth quarter GDP numbers were revised lower, and this is good news. This is what the Federal Reserve is on the lookout for. They want to see a contraction in the economy and then hence reduced inflation. Also out last week, consumer spending and sentiment retreated. More good news. It wasn't dramatic, but enough to keep the markets elevated. And core PCE, that's personal consumption expenditure data, very near and dear to the Federal Reserve's heart, and it did show a softening in February. More good news as it relates to that potential lowering of inflation, and then hence the markets trading higher. Next up, next week will be shortened, holiday on Friday, but March employment data is due at the end of the week, and that's going to be really closely watched. Again, all about the strength or potential weakness of the economy, and then hence the Federal Reserve's action relating to interest rate hikes going forward. So from here, let's take a look. Where did we close the markets for the week? And here we are with the daily price chart of the S&P 500. A couple of items of note here is the fact that we did have that follow-through day last week, and that is a system that was founded by William O'Neill, the founder of Investors Business Daily, and it is certain characteristics that have marked the bottom of a market that's been in a downtrend, or certainly the reversal into a new uptrend over every market cycle. Now, of note is the fact that that follow-through day does not always mean the markets are going to shoot to new highs. More importantly, it is showing you that over the near term, the S&P 500 is now in an uptrend. The characteristics are the broader markets increase by more than 1.2% on volume that is greater than the prior day. And then also it is a certain number of days from this recent bottom. So net, we are in a new uptrend with the S&P. We do have that RSI in positive territory trending higher, and the faster moving stochastics momentum also trending higher. Now, of note is the fact that we are on the S&P still below this critical 4,100 area. That's your next area of possible upside resistance. A move above that would give us even more confidence in the S&P 500's new uptrend. Let's go ahead and move on. Take a look at the NASDAQ composite. And this also had a nice week in the sense that it closed above this key 1200 level, which has been noted repeatedly as an area of possible upside resistance. So good news there. We can see the RSI in positive territory, trending higher, and likewise with the stochastic. So nice continuation rally in the NASDAQ, which had already reversed. Let's dig a little deeper here. Take a look at some of these 11 underlying sectors within the S&P 500, and we're looking at a 2-month daily price chart view. I've added an RSI, that's a relative strength indicator, so that these sectors are now sorted in order of strength up here and then weakness down in this lower right quartile. And this is a slow progression. It's not very whippy, but first up here, technology up here in the forefront. And this has been a leading sector for some time now. We can see XLK trending upward and moving higher. Some of the biggest weightings here, Apple and Microsoft, and both stocks are faring well here, certainly in the current market environment, but there are other areas of strength that I'll share with you in the tech sector as we move forward. Also up here in the forefront, we can see other growth areas, communication services, XLC. This is going to be all about Netflix and Alphabet, both outperformers last week, moving the group higher. But take a closer look because there are other areas in the communication services area that are also faring well. Another area that just moved into an uptrend, and that is consumer discretionary. XLY is the ticker symbol. And this is, of course, retail-laden. Amazon and Tesla are the heaviest weighting, and they both outperformed last week as well. But we can see, as it relates to the technicals, XLY has broken above each of these moving averages. We have that RSI in positive territory and trending higher. And then we can see that black line up through the red on the MACD in positive territory. In essence, consumer discretionary stocks have reversed their downtrend. And I will share with you a couple of downtrend reversal names in that area as we review that viewer question of the week. So let's go ahead back and take a look at some of these other sectors and where they're positioned. Other areas that are moving quite nicely into uptrends. Industrial, XLI, nice double bottom formation here, and the group now above its moving averages with positive RSI, so that's quite constructive. Also, one other area that's not quite there yet, but is certainly moving in the right direction, basic materials, XLB. We can see higher lows taking shape, a move above these moving averages, RSI, MACD, in positive territory. And these are areas, industrials and materials, that are very economically sensitive. And so when SVB Bank and others fell into crisis mode due to fears of a global recession, those areas were hit hard. But as banking fears are receding, they are coming back into their own. Last up here, we can take a look at financials. And while they did rally last week, they are still very much in a downtrend, but certainly moving further as it relates to going in the right direction. We're coming out of an oversold position here on XLF, the RSI trending upward, and likewise with that MACD crossover. So keeping a close eye on that. At some point, we will see those financials in an area where they can continue to trade higher and be viable. So let's go ahead from here and take a closer look at the markets. And what I'm sharing with you here are some very relevant ETFs that are quite helpful as far as getting your arms around where the strength is, where movement is taking place. Again, a 2-month daily price chart view and sorted by order of strength to weakness. So first up here, taking a look at software stocks. IGV is a widely viewed software ETF, and we can see this nice sharp uptrend. Sharp rally today, of course, on Friday, has pushed IGV out of a base and to a new near-term high with an RSI trending upward, and then likewise with that MACD in positive territory as well. So this is that another area within technology that is helping to drive that sector higher. And then also semiconductors, not quite as vibrant this week as software, but certainly in a nice uptrend, poised for a lengthy 2-month base breakout as it continues to trend higher. So those are two very strong areas in the technology space. From here, we can take a look at some of these other areas coming into their own Here we are with medical devices ETF. It's the growth area among healthcare stocks. IHI is the ticker. It has reversed its downtrend. Nice move above that 50-day RSI, MACD, both now in positive territory. This is another vibrant area to be on the lookout for downtrend reversals. As we move further to areas that are experiencing a bit more in the way of weakness, I do want to share with you XRT for months now has been in the bottom quartile, but take a look. A nice rally that's shaping up over the last week and a half as these retail names are beginning to reverse their downtrend. We can see the RSI for XRT in positive territory, and then that nice MACD crossover indicating that this downtrend has reversed. So this again is an area I'll share with you a couple of names in the throes of reversing their downtrends as well. So from here, let's go ahead and do just that. First up, I do want to share with you, however, a pretty big name that reported strong earnings last week that is one of several drivers for these consumer discretionary stocks, and that is Lululemon. The company reported earnings well above estimates, gapped up on the news quite highly, and regained or retained that upward move in the sense that it did not close the gap here, still very much on pace to trend higher. But as you see companies in a particular group report strong earnings, oftentimes you will see it spread out beyond that. So from here, let's take a look at a couple of stocks that are exhibiting characteristics that are evident in stocks that are reversing their downtrend. First up here from consumer discretionary is DraftKings DKNG. And what we can see here is the stock had this nice gap up here at the end of February, pulled back very orderly to this upward trending 50-day simple moving average. And then this week, due to an upgrade to the stock midweek, it did break back above these moving averages, your RSI trending upward above 50, and take a look, your MACD still in positive territory, experienced that black line up through the red, indicating a reversal of this downtrend. So that's one very nice candidate. Another name that we can look at that is also in that consumer discretionary, not quite ready for prime time, but in the throes of reversing its downtrend, and that is Starbucks, SBUX. You can see that it faltered here, certainly with the markets in February, but more recently is in the throes of reversing its downtrend as we have closed above this 50-day simple moving average. Nice high volume here, RSI in positive territory, and again that MACD crossover. One highly relevant name in the industrial area that I do want to share with you that is reversing and has reversed its downtrend is Deere, bellwether name DE, and you can see a nice double bottom formation after the stock pulled back to this 200-day simple moving average. The stock closed today above that 50-day and that RSI in positive territory. And again, that nice signal here with that MACD black line up through the red. That's it for this week. Everyone have a fantastic weekend. I'll look for you again here next Friday afternoon. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.